Good morning, ladies and gentlemen. My name is Wouter de Plooi, and I'll be your host this morning on the topic of reinventing correspondent banking. We're basically going to ask ourselves 4 questions today. Why do we need to reinvent it? What's the need for change? 2, what is it that we need to focus on? 3, how do we go about it? And 4, when is it that we have to act and move? One could say, if you listened yesterday to Gottfried Leiberend's speech, that the need for change, the why, is rather obvious. He talks about his 3 trends. One is the move from west to east, the new consumer demand, and then 3, technology. And if you think through about correspondent banking, what's happening on those 3 fronts, there's clearly a need for change. We're moving from west to east in terms of new infrastructures being built, innovation happening. Customer demand is clearly becoming more demanding and saying, if I'm used to real-time and instant payment and at home and e-commerce is so easy to do, why can I do it the same way in an international context? How come we're lacking that performance that we're looking for at the domestic front? And 3, technology obviously is also bringing new ways of working. We're all excited about some of the new technologies coming out. So one would be convinced that the need for change is clear, but that's not necessarily always the case, and one would wonder if the need for change is there, why don't we see the change happening? So we're going to try to debate those 4 questions. We have an exquisite panel for you today. We're also going to involve you with some questions that we want to bring to the group, and so you'll be ready with your voting and your input. So maybe I'll start with introducing my panel. First of all, we have Nigel Dobson from ANZ, General Manager of Group Payments. He's been in the region of Asia Pacific for some time, 19 years with Citi and since a while with ANZ. So Nigel, what's the one word that comes to your mind when you think about reinventing correspondent banking?
Customer.
Customer, good. That seems a good place to start. At least for bankers, it's somewhat unusual sometimes. Yes. Very good. George Doolittle is our next speaker or panel member. He's an EVP with Wells Fargo, Head of Global Payment Services. He spent time in the States, Paris, London, and then set up the Global Payments Unit at Wells Fargo. He's also Vice Chairman of the member group of SWIFT here. So what's the one word that comes to your mind?
Transformation.
Transformation. So we've got to move the customer, respond to his needs with a transformational approach. Ebru Pakshan is our 3rd speaker. She's with Citi, Global Head of Payments and Receivables. She's been in London, New York, has served on boards of CHAPS and now the Clearing House. So Ebru, what's the one word that comes to your mind?
Collaboration.
Collaboration. So we need a collaborative approach to transforming our banking system with the need of the customer in mind. This is building up to a nice story. Good. We didn't prepare any of this, of course. Larry Sobhan is Head of Correspondent Banking and Dollar Payment and Clearing at BNP Paribas. He's been spending some time in the UK, North America, worked at HSBC before and was with PricewaterhouseCoopers before. So what's the one word that comes to your mind?
Well, I will stay with the word change.
Change, transformation, change. So that's getting consistent. And then we have Chris Wasden. He's a bit the odd one on the panel here today. He's a professor at the University of Utah and has focused quite a bit on change, how to make change happen in a technology-rich environment. So what's the one word that comes to your mind?
Pain.
Pain. Does that resonate? So we have a customer that needs some change, and we're ready to move and transform ourselves, but it's going to be painful. Good. So we're ready for a debate. We first have 2 questions for you as a group to feed into this discussion. So if you can take your voting machines. If we can have question number 1 on the stage. So in 5 years, do you believe your transaction business will be smaller or bigger? For bankers, that shouldn't be too difficult. 10 seconds to go. Ooh, okay. We have an optimistic crowd this morning. So beside, even given the threat of innovation happening and the need for reinventing correspondent banking, we seem to be thinking that we're going to have a bigger business going forward. So that's positive news to start the date. So why don't we look at number 2, question number 2. We have new entrants getting into our space, and we get a lot of media coverage for them and lots of hype around it. Banks also are starting to experiment, some with innovation labs, other ones with investments in smaller companies. So what do you think? Will banks do away with their current model and replace with new technologies what they have as legacy systems since today? Or is it going to be reinventing what we have today? Okay, so marginal change maybe to limit the pain that we were talking about earlier this morning. So Ebru, what's your sense in terms of the need to change and the urgency to move in correspondent banking given what's happening around us in the world?
Well, audience has a view, obviously. So the need for change, well, I think the first question to ask is what kind of change? I think the way we pose the questions is talking about a business model change or change in corresponding banking models. I think the first thing I would say is there are certain good things about correspondent banking models, right? It's something that we've built over the years as banks, and first and foremost, it's a trust relationship where two institutions trust each other, not only to make payments, to do a variety of things, right? We do documentation checking for each other. We extend each other's credit lines. So I think just stepping back, and I know there's a lot of correspondent banks here, bankers out here, who are perhaps even correspondent bankers for life. It would be very difficult for us to throw away that trust relationship. Mm-hmm. And it's a very valuable relationship. So keeping that intact is important. But the reason for change, and I think there's actually a lot of urgency around it as well, is our customers. Because they are changing and their needs are changing. And this has been changing for a while, but I think the expectations or the speed at which they'd like to move to have their expectations met is changing. Yeah. And customer, of course, is a big word, but you need to go behind that. There are many, many different customers who are coming to banks or to other institutions with different types of expectations. The expectation of a corporate treasurer is very different than that of a broker, a consumer, a small, medium enterprise, and each one of them are looking at the broad world of payments in a very different way. And of course, they don't differentiate between whether that's a SWIFT message or a faster payments in UK, or if it's a real-time payment. They are all coming in with the intention to do something. So in that changing world, banks, just like any other institution, just like any other commercial business, need to continue to think about customers and actually try to figure out what value are they looking for and try to meet that value as best as possible. And I think in many ways we would say, while there are really good things about our correspondent banking models, that relationship is very valuable. It's a very resilient infrastructure that we have built over the years. There are also certain things which are painful. Chris said pain. There are things which are painful, or there are things which are opaque or unclear. And we do need to think about those things. And some of them are there for reasons that perhaps we can all understand why they are there. But some of them are there because they've always been there. And that's not a good enough reason for them to be there in the future. So I think change is real. And we have technologies and capabilities within our institutions or outside of our institutions, which actually allows us to do a lot more things differently. So why wouldn't we leverage them? There's new market infrastructures out there. Again, one of the things that correspondent banking has been doing for years is to connect RTGSs. But there's a lot more other market infrastructures out there. So if some markets are doing real-time payments locally, why shouldn't correspondent banking leverage that capability? So why would we let it go unused or by banks when perhaps others are starting to do so? So for me, it all starts with the customer. Okay. And we just have to answer the question of what is it that we want to change and how we need to change it.
So Nigel, this must resonate with you because you started off with customer as your number one word.
Well, I think what we do is think of ourselves as customers of each other, which is entirely appropriate. And we particularly around discussions at Cybos, we aim to optimize that customer relationship. But what we often forget, and I don't mean intentionally, but it's to Ibra's point, you know, we don't need to change the first mile and the last mile, particularly for commercial clients, small business and consumers. I think we do a very good job of helping large corporates, large multinationals and other FIs. I think we do that really quite well. It's that smaller customer who has a voice, who can get on Twitter and complain about the worst experience they've ever had trying to send money from one country to another. And the banks kind of sit back and with a blank face and say, well, that's just how we do it. And I don't believe that's good enough. And we've got pressures from regulators, we've got pressures from alternative ecosystems emerging. And I believe we've reached a tipping point in our community where some action needs to be taken. And I don't actually think, again, I'm be interested to hear what Chris says about pain, but this needn't be particularly painful. These are things imminently within our control. These are things that we can change, harmonize, and agree on as a community to give clients a better experience, better transparency, reveal the speed which already resides on the network, and not talk about the exception, but talk about the vast number of transactions that happen very rapidly, very securely, and let our public know that that's what we're doing.
Yeah. So Chris, you've heard
let
the
me throw
here.
a bomb in this, right? So, so here's my problem. Amazon can move atoms in 24 hours from some warehouse to my home from the time I order it, but a bank can't move electrons in 2 days. So why is that, right? So I, as a consumer, I believe that there's a different C word. It's not customer, it's consumer that's really driving this. Because the consumers are saying, I'm having a certain sort of digital experience with Amazon, with Uber, with the media, with travel, and things like that. Why can't I have that same digital experience in banking? Why is banking giving me the same experience today I had 30 years ago? And that's just completely unacceptable. And when you look at, so we did a survey yesterday and in a tribe session. And we said, what do you think are the primary drivers of transformation of financial services? And it wasn't customer, it was consumer. Because what happens is the consumer saying, I'm demanding this. That's putting pressure on the customer, your customers. And it's also then consumers vote. And consumers vote, and so regulators and legislators are saying, look, banks, this is completely unacceptable. If the tech industry has figured this stuff out so they can have instant transactions, instant gratification, I get an email confirmation by the time I click that says that a transaction is completed. Why do you guys take a long time? Why do you charge a fortune for it? When I get a wire transfer for a swift reimbursement for something I do, right, the bank charges me $15 for something the bank paid Swift 50 cents for. So why are you charging me huge rates? I don't want to pay for your infrastructure that you've got. I don't care. You have expensive infrastructure. If other people can do it for pennies, why can't you? If other people can do it instantly, why can't you? That's what I demand. And so consumers are demanding this, and banks have to respond to it. But if we look at that delta in time, 2 days to seconds, if we look at that delta in cost, $15 to pennies, okay, that's the pain.
So Larry, what's your reaction to, I mean, Chris is basically telling us, yes, we see the need for change and we're customer focused, but not with the level of urgency and the radical change that is really needed if you take it from a consumer driving a change. What's your reaction to that?
Well, I don't think the objectives are mutually exclusive. Obviously, we're a consumer-driven organization, or banks that we work for are consumer-driven. But I'd like to use the term trust and verifiable. It's a term from President Reagan, but it's really true in banking today and true in terms of what we're trying to offer up in correspondent banking. It's that trust between banks and the ability to verify that trust through the right level of controls, the right level of safety that makes what we're trying to do so important to the consumer. We're not ignoring the consumer need to have faster, cheaper, quicker, but at the end of the day, there are a number of touch points on a transaction that may take place between when you walk into your if you even walk into your bank branch, if you log in to your iPad or your iPhone, you know, and ultimately the transaction is around the world. There are many touch points. There's your bank, there's your customer's bank, there's their interaction that they're having with the various and corporates that are involved with that. And when you're dealing with that on the scale that most of these banks are working on, where they're doing not billions of transactions per year, trillions of transactions per year, you want to be sure not only is it secure, but are you complying with the rules and regulations that apply on a global scale in each individual country? Are you protecting your clients from risk of some form of cyber risk, some form of security risk? Those topics are why I think the trust side is so important, and the banks have to have a secure network to do that.
So George, what do you think about this? Because one view on this would be to say there's a clear need for change and an urgency, and we get a response from a banker that talks about trust and risk, which is, you could think of as defensive, if I'm a bit provocative. What's your sense around this?
Well, I think I actually believe I agree with both. But I think that the challenge with correspondent banking is that it's a tremendously, and I'm a lifer, it's a tremendously organic animal. Over many, many years, we've found ways to respond to customer requirements in innovative fashions. I often refer to Field 72 and the 103 as poetry. We have all sorts of things that we have crammed into 72 into free format messages, which if you reveal the content of those messages are responses to a multitude of customer needs and requirements that we have had to innovate in those fields. I like to call it the unpacking of those free formats, really. And that's where I think correspondent banking has to go, is we have to go back and unpack those fields, understand the nature of those use cases. At the same time, most of us don't live in a value-dated world anymore. Most of our correspondent banking, particularly in the payment space, business is done on a minute and hourly basis. Our customers expect us to cover their transactions and advise them of those transactions, some of which are billions of dollars, within hours of the receipt of message. So the challenge is, how do we respond to each customer segment? And are we doing the right job? Are we doing as good a job as we can do in responding to the consumer segment and the use cases that are coming through to us from the tech industry and the online web space?
Cool. You started talking about use cases. Maybe that brings us already into from the why, which I think is shared around the panel of why we need to move, etc. What is it that we need to focus on? What are the use cases? What are the applications? The functionalities that we need to focus on. What's your sense on that?
Well, so I think if you want to look at what's happening in today's world, I often think, I go to sleep on 3 use cases at the moment, which are more novelty, I think, than the core of my business, but still they're more exciting than thinking sometimes about the core of my business. That is, for example, a tech company who perchance pays drivers around the world and initiates thousands of transactions a day of less than $25 that need to be executed to over 120 countries. How do you do that wire in a way that the beneficiary has an experience as well as the remitter that's end-to-end and transparent? And are we leveraging, for example, our ATM networks to deliver that? Are we leveraging some of the other equipment? The second might be the microservice that we've put into our Facebook to make sure that when our customers on Facebook are looking for one of our services, they're there. When that transaction bursts out of Facebook, are we catching it and are we delivering it in an end-to-end experience? And those are a couple of use cases that I worry now on the margin I need to focus on, although the core of the business remains, how do I move billions of dollars within minutes today?
Faster.
Faster.
More predictable. Good. Why don't we get the audience to think about this as well and give their input as to what are the most important functionalities, the what's. If you could get question number 3 on the, take your voting machine. Chris, what's your sense?
So we ran a session yesterday on China and India and what's going on in the transformation and the payments and financial technology there. And what was fascinating is to see that in China, the 3 big tech companies, which are Baidu, Alibaba, and WeChat, are becoming major influences in financial services. In fact, Alibaba is on the course to becoming a $1 trillion transaction company. And what they're doing is providing instant transactions, not just to the consumer, but also credit to the consumer, also credit to small businesses. Right, so they're not starting with a correspondent banking structure. They're starting from the ground up as a tech company with a model that we innovate and we try things out every single day and try new things out. And they're providing trust. I mean, they are becoming the rails upon which almost all commerce takes place in that country. Yep. We talked about WeChat and how WeChat is how you're ordering your car, how you're making your payments, how you're making reservations, how you're paying your employees. Right, so you've got new technology companies that are digital from the ground up, right? They've never been anything but a digital company. Now they're becoming the infrastructure of financial services. And what's interesting is that when we look at why it's working so well in China and why these companies are becoming so dominant, it's because they don't have the infrastructure we have. And the problem is, I used to live in the New York area. I worked for JP Morgan for many years and PwC for a while, and so I would take the commuter trains in. So, 100 years ago, those commuter trains were pretty nice. But compare those commuter trains to what China has today. They're pretty awful, right? And they're very slow, they're clunky. So China has the benefit of being able to have no legacy and building from the ground up with new technologies and new strategies and new infrastructure. We don't have that. We have all this legacy.
And to go straight to the requirement levels that are these days.
Exactly. So we did a survey and we asked everyone, which companies do you think are going to be the biggest winners in financial services in the future? And we had on the wall all these startup fintech companies. We also had these Chinese companies. The majority of the people said Alibaba is going to be the clear winner in financial services in the future.
Because they were offering?
Because they have a better solution. They provide an Amazon-type banking solution to consumers, which will then, actually, it's not just to consumers, it's to small and medium-sized businesses, and eventually it's kind of move up the food chain to providing it across the board.
Okay, good. I think we have question number 3 now up for the audience. So what is it that we need to focus on to deliver value to these segments and to be competitive with these new players? So what is the feature, the functionality? Ooh, okay. That's across the board. Larry, any reactions to this? Or?
Well, it's again the consumer talking. Their wn ranking is increased speed to instant real-time payments. We as banking institutions, SWIFT as a banking utility, have to respond to that. I couldn't agree more that the challenge is not blowing up what we have today in terms of our infrastructure. The challenge is transforming that infrastructure. We have to be quicker, we have to be cheaper, we have to be more attuned to what the consumers are looking for, and we have to do that in a very rapid way. And of course, I'm going to go back to the trust and go back to the security and make sure we don't lose what we do best in innovating what the consumers want. So I don't think the two are mutually exclusive.
Keep our competitive edge while we're meeting the demands of the customer.
Correct.
Ebru, any thoughts on when you see these results?
Well, look, I'll just go back to the customer. And I don't disagree with Chris's point that consumer is driving a lot of change, but consumer is not the only customer. And consumer is the customer for many of our customers, including our banks. And while some of these things are probably top of mind for the consumer, if you asked an institution, a corporation, information is perhaps top of mind. Rather than real-time payment, they would say, I'd be very happy with a same-day payment, but give me a lot more information because I need to apply that cash to my account receivables and really close that book. So I think it's just what is very hype or mediatic is of course the needs of the consumer, which clearly has evolved and the demand is out there and we have to do something about it. But that cannot be the sole thing which is driving what we are trying to change, because if we do that, then we are going to miss the needs of an awful lot of other customers. And therefore, we have to get back to segmentation and be very clear about who needs what and in that journey of their experience and try to address all of those. When it comes to consumers, if you perhaps look at the entirety of volumes that goes through correspondent banking, in terms of value, that's a very, very small portion of P2P activity which goes through these rails. Because the rails weren't necessarily built to do that. I mean, you have to remember the rails were built to do the big value cross-border transactions. What is perhaps a disadvantage is that the rails have not been renewed thinking about the consumers.
Starting from the new needs.
Exactly, and that's what we need to accelerate, but that cannot be at the expense of other customers and what their needs are, and we need to be careful with that.
Nigel, any?
Yeah, I've got a point of view here. I'm going to be a bit provocative here and say this is a typically banker's answer, right? Now, what Chris said before is what I personally feel as a consumer, and that 6% on the thing that we can change tomorrow is remarkably low. Everything else takes a lot of investment and a lot of time to deliver, and it will happen, in my view. But the thing that you guys have rated the least of your priorities is the thing you can change tomorrow to make me and you as consumers much more satisfied with your banking experience.
Because you'll know what you have to pay for the service.
Precisely.
Render. George?
I agree entirely with Nigel. I think that, throughout this conference, what I hear when we start talking about transformation or disruption is, well, my spouse or I went on and we paid $1 to make a wire across the world. And I got the tracking and I knew when it was received. So I kind of follow where Nigel does, and I think maybe 1, 2, and 3 are the same, really the same issue, which is end-to-end customer experience is what correspondent banking has to deliver, and it's failing to deliver today. And it's failing to deliver that end-to-end experience because, first and foremost, the charge codes are out of date. We need to kill the codes and go back and revisit the revenue model. Second, we really do a very poor job at alerts and transparency around tracking, not only of the processing of those transactions, but also the outcome of customer service cases. And so really for me, those 3 are wrapped up in the same challenge to the industry. And that challenge is, to Ebru's point, not only to the consumer, but it's also to our middle market that we serve through correspondent institutions, to our financial institutions themselves, and to investment banking and all the other customers of correspondent banking today.
So Chris, you're satisfied with these answers? I mean, the need
I feel like I'm getting 2 converts, right? So we're kind of moving, because again, as we start to think about our personal lives, we start to think about this differently than we think about our institutional lives.
Exactly.
Yes.
And I think
That's
too
the point
often,
you were bringing.
right? And too often, and I used to work for a big bank, right? So I can say stuff like this. It's kind of like in healthcare, you can only say bad things about healthcare if you're a doctor. If you're not a doctor, you're not allowed.
Exactly.
So I used to work for JP Morgan for 10 years, so I'm qualified. I think too often as banks, we're focused on what's in it for us. We're not focused on what's in it for the customer or the consumer. And I think we need to be more focused on how do we deliver value. And the value equation's changing. And to Larry's point, it was interesting. Yesterday in one of the sessions we did, the view was we're not going to blow up correspondent banking and the current rails we've got and replace them with something else. What we're going to do is we're going to have 2 parallel systems going on. And we're going to have this new emergent system that is going to be more purpose-built for the new reality, and this backup system which will atrophy and die.
So
just like
one moving up and one scaling down.
Just like 2G died and 3G replaced it, and 3G's dying and 4G's replacing it, and 4G will die and 5G's replacing it, right? So we have these new technologies that will come in and replace the old technologies, and the old technologies will die. Because these technologies were never built for the world that we're in today, and they shouldn't continue to survive. We shouldn't continue to protect these and say everything's got to be built on these rails. We should build new rails. Now, the challenge is who's going to do it? And this is the challenge we had yesterday in many of the discussions, which is that these new startup companies in fintech are very narrowly focused and very focused on delivering value, right? Because they'll only survive as long as they deliver a new source of value. The big companies are focused on 1,000, maybe 1 million things. And because of that, you give 5 things up there to focus on, and the thing that they could do the easiest, they aren't even focused on at all, And they're kind of focused on these other things, but are they really? Are they really there to deliver it? And so
focusing on the pain points, basically.
Right. And so I think what you're going to see is that we've got to have the incumbents figure out how to cooperate with the group that are focused on this change of creating new sources of value, and figure out how can they work with these change agents. And that's the pain, is that we're never going to change the status quo as long as the pain of change is greater than the outside pain forced on us by the industry.
Exactly.
All right, and so all these new entrants now are creating so much pain outside through regulators and through customers that we have, that pain now has to increase to the point where that external pain and pressure is greater than the internal pain of change. And once that eclipses, then we'll start to see the change we need.
And you think competition from smaller companies or consumers will actually make that work? Because I recall I was part of the initial group that launched SEPA, and you can beat me for that, but that basically happened because Regulation 2560 was issued, which was some sort of a silly regulation, but it forced banks to move forward because they said, we can do more silly regulation if you want to, unless you guys start moving. So is it the competition, the consumer or customer, or regulation that will drive change and make people move?
Yeah, and that's what drives change in every industry, right? So you look at the incumbents. I remember I was in the dot-com bubble with a startup company at the time, and when Amazon was emerging, Walmart, and this is kind of fascinating to think about this in the context of blockchain discussions and whatnot. Walmart said, we've got to come up with some sort of online store. We can't do it in our core business. We'll create some sort of a spin-off company to do that. And they did that. They've never been nearly as successful as Amazon has been because Amazon's a digital native. And at the time, Walmart and others thought that the internet was all about how do we do e-commerce. Fast forward 15 years, and what do we find? The internet is involved in every single aspect of our business. It's in sales and marketing and HR and production. And so when we look at these new technologies like blockchain, the big debate yesterday was that blockchain actually isn't as important for transactions as it is for contracts, right? Because that's where all the waste is in the system. Yes. And so what we'll do is we'll find a pain point like contracts where there's huge amounts of waste. We'll apply blockchain first there, it'll become adopted, and then once it's adopted there, just like the internet got adopted in e-commerce first, then it'll start to involve every aspect of our business, and one of those will be transactions.
Good. Why don't we put question 4 already, but maybe Nigel, you want to react to that on the how question, right? We've moved from the what and from the why and the what to the how. How do we make the industry move?
Well, I think that we've all read the book around disruption, right? This is not a new concept to the industry, and there's quite a long legacy of banking industries, the community adapting to change, including the internet, by the way. And I think most of us love mobile applications. We like having them for our clients, and we like using them, for example. Yeah. So we've got a lot of history and proof points in our own evolution to show that we actually love new technology. And I'm also not in agreement that we have to, as an industry, see an equilibrium point tip over when the balance you describe is what's happening. But we're, as I say, we've recognised it, and we're not going to wait for it to tip. And so I said, I think earlier, I said there's a tipping point we've reached. We've acknowledged it. And so we're trying to get ahead of it. And I'm hearing a lot of very positive conversations, a lot of very collaborative conversations and tone around this conference amongst a lot of banks who acknowledge this problem front on and really feel that there are a number of initiatives and things that we can do together to drive that improved consumer experience, to give ourselves a chance to sustain the business model and the transactions model for a significant period of time, and also invite in new technology. This is not a walled garden. This is a bunch of bankers trying to do things better. And if we can get fintech startups, established technology firms helping us, as many of them are very happy to do, why wouldn't we adopt a new technology? And I agree, I don't think it's the transactional piece, I think it's more the accounting ledger piece that I think is the best fit for. I think transactionally, at the moment, the network we use today is absolutely the leading network. The
pushback we had yesterday on your points was that banks have this bias to build everything in-house, to reinvent the wheel in every institution, when they should maybe use the common wheel,
Sure.
where they could collaboratively, and that's why Swift was created, right? But they said that it's biased towards reinventing the wheel in every single, to try to give yourself some sort of competitive edge in an area where you really aren't creating a competitive edge. That's the biggest barrier.
I think, though, that thinking is changing too, because banks just simply aren't making enough money these days. I know that sounds like a strange thing for me to say. And so we're very focused on total cost of ownership of our infrastructure. And the discussion around utilities is much more prominent than it was 2 or 3, 5 years ago.
Yeah.
Banks are thinking, gee, if we only shared our technology and created a utility, for example, we could save a lot of money. We could drive the total cost of our infrastructure down. If we collaborate on a global network, which is already established and fully installed, there are a lot of points in that infrastructure that could be shared, and that total cost of ownership could go down. And everyone's read the legacy technology book as well. We're all burdened with it. We'd really not like to repeat that and have a bespoke solution for every bank, every country, and every region. There is a very, very strong momentum, I think, behind the thinking around harmonised standards, harmonised infrastructure, and a sharing tone in this meeting.
So you see the mindset being shifting?
I do.
Well, actually, that mindset has shifted a very long time ago. So I mean, I agree with Nigel. The very existence of this conference is because banks have been buying from each other to start with. And every year, and I'm sure many of you have been coming to Sibos for many years, every year the number of financial technology companies in one way or the other who attend this conference has increased. Outsourcing firms, technology companies, etc. So they wouldn't be here if they didn't expect or they didn't know that banks would actually participate or collaborate. Can it be more? Well, of course. I mean, there's always a lot more that can be done. Banks build things like KYC utilities together over the last 2-3 years. So I don't agree with that point that banks want to build everything in-house. I think what banks want to do is perhaps a lot more cautious than various other industry participants for various reasons, because they really need to work on that trust and risk and security element of things, because banks come under a lot more pressure when there is a security or a data breach versus a non-bank institution who's firstly not as well regulated, but also doesn't necessarily stand for trust. And banks have done some mistakes over the years, so you could only expect them to be a little bit more cautious when it is a piece of new technology or a new piece of process, but that doesn't mean that banks aren't willing to do these things. I think there's actually a lot of willingness to do that.
George, you share that optimism about?
Absolutely. To an extent. I think that there is an embedded revenue model that needs to be addressed. And I think it has to be actually broken and kind of rebuilt. But that's where the pain is. But as I said earlier, I think that the messages and the pipes are littered with creativity that we've delivered to address customer experience. And I was just recently in Northern Africa, and it reminded me, people would say to you, hey, we work with your Swift loan product. Well, I don't have a Swift loan product. What happened? Years ago, banks agreed to put a standard BAFT loan format in the free text of a message, and they do trade loans with each other so they can accelerate exports and imports by a simple authenticated Swift message. That was a creative response to a need that surfaced in the market. And the challenge for us is, outside of having to break a few things and repair them, is go back to that creativity and into that litter of customer and bring it out and revisit it again and take a look at it.
Cool. Why don't we have the room give us some input about what they think is the biggest challenge for banks? You have question number 4 up. So what's the biggest challenge banks need to overcome? And Larry, why don't you be ready to give some reaction to what the audience thinks?
Well, I think that goes back to some of our colleagues here comments earlier, which is, look, of course we're under cost pressures in terms of the legacy systems. Yes. We've heard about the companies that have the advantage of only having started in the digital age. And what do you do about the legacy infrastructure? How do you re-engineer at the back end? How do you make it more efficient, more cost effective, pass those costs and efficiency on to your clients, and those savings onto your clients, and doing that while still maintaining, your ability to service your corporate clients, your banking clients, your SMEs, your consumer clients, with trillions and trillions of transactions per day. It's difficult to imagine. If you look at just the IT industry as a whole, how many original PC manufacturers are in business today making money selling PCs, which is a commoditized product, but how many are being very successful in managing the networks that people are operating under, in managing the servers? To me, banking is no different. We have to adapt in the same way. It doesn't mean the bank of the future ignores consumer developments, but what it does mean, we believe, the bank of the future still has to make sure the backbone works. If I'm servicing a corporate client, and that corporate client is operating in 90 countries, in 90 different currencies, with 15 or 20 local banks, you have to be seamlessly being able to do that. I'm not suggesting that it's not important to send a dollar payment or a currency payment to one account in one country, but try doing that across 90 countries, across 15 different banks, across 90 different currencies, and do that in a real time. And you look a little bit at what the challenge is. So our challenge is to enhance and build and improve the legacy that we have, respond to the consumer, respond to our clients, which are not just retail clients, they're SMEs, they're corporates, and do so in a way that enhances the value proposition. We have to do that, or we won't be here for the next generation of banking.
Okay. Any other thoughts or reactions?
I just want to pick up on that comment, because I said earlier that banks, in by and large, particularly the large global transaction banks, have done a superb job of solving that corporate problem, which is an immense problem. And yet, we treat our consumers very differently. We've got all this thinking, this tech, this ability, and we haven't corporatized our consumers. So I think we're going to have to corporatize our consumers. We don't have to offer them, advanced liquidity management or sweeping, but what we can do is take some of that IP and some of that competitive tension that exists in that MNC market and drive it into our consumer base. And I think that the levels of satisfaction within that consumer base would rise rapidly. No, not without pain, I acknowledge. But it's not to say this is a reinvention of what we do. It's just a transfer of so much of this corporate servicing IP that we already have in place, installed already. Yeah.
Any other? Chris?
I'd like to say, I think that the back office systems are definitely a challenge, but I think that there are absolutely numerous ways to get around that and above it. And I think the biggest challenge we have as institutions is trying to bring that laboratory experience into the day-to-day and have the workbenches available to the people who are coming up with ideas, and get those people to come up with ideas. I will say this, and I promise myself not to raise the word, but even when we do that as institutions, and I have a product team, we got to go through audit, we have to talk to a regulator, we have to have a product risk group come in and take a look at it, and that process is definitely slowing a lot down.
Yes.
But I think that if we can accelerate the process by dropping benches into the workplace, we can overcome some of that latency.
Ebru?
Look, I think what the audience thinks. There's clearly a lot of things that I can resonate with, but perhaps to me one thing which is even a bigger challenge, which is not necessarily listed there, is around value proposition thinking, because that sounds simple, but it's actually not very simple. And perhaps around certain client segments, we are better attuned to understand what the needs of that segment is. But when I think about some of the successful companies, whether they are startups or large firms, and someone like Alibaba is not a startup of any kind, it's a full-fledged company, they are approaching the customers with a different value proposition. It's not about making a payment, it's about buying a service. If you look at someone like Uber, it's all about riding taxis. Payment is an attached component of it because you have to figure out a way to pay. But the value proposition is entirely different. Now, clearly, as long as we are banks, we are not going to be in the business of selling pizzas or goods or riding taxis.
Exactly.
Our service, our product is a payment. So you have to start thinking about, and again, if you just go and think about one segment to consumers, what is the value proposition? If the payment isn't the interesting bit, what is it that the consumer is interested about? It becomes easier when you start thinking about other segments because there's a lot more when it comes to value proposition. And I think if we specifically focus on consumers, that's one of the challenges of the banks because payments are sitting as part of a bank, which is in the business of financial services, and it's not as easy to think about value propositions.
So two things that came up yesterday that are interesting. One is that to your point about payments is, people don't want the payment, they want the thing. They want the trip. And so you've got companies like an Alibaba or a Google or an Apple who will give the transaction away for free, could give the transaction away for negative value in order to get the other, or give the other thing and get the other thing. And so I think that's part of what's happening is that transactions are increasingly becoming something that will be given away for free in order to facilitate something of greater value. The other thing that came up yesterday in a session we ran on APIs, when we think about APIs, we think of them as a technology. The overwhelming discussion focused on how when you create APIs, and banks need to create an API for every single product, okay? All of a sudden what that does, it forces you to unbundle, it forces you to disaggregate the bank, and the most important thing that it does is it forces you to radically change your culture and radically change your structure as a bank. And so these API technologies are more about completely rebuilding a bank than they are about just providing some sort of a technology. And they said that the other thing that's interesting with APIs is that when you, because the development of the companies that are delivering the value, okay, with the transaction, the developers will only develop apps around companies that have good APIs. Yeah. And so those banks that have the best APIs are going to be the ones where developers are developing the best apps to solve problems for people. Yeah. And so you have a competitive advantage if you have better APIs out there in this new digital world in which everyone wants to integrate everything.
Cool. I think what I take away from this discussion so far is that there's a clear understanding of the why we need to change. There's some clear ideas about the segmentation we need to do when we think about the what to deliver, some discussion about the how as well. I think one question we'd like to put to the audience now, and that's question number 5, is you think banks are now really ready to deal with this? I get a sort of a positive sense from this group and this panel, but what is it that you think in terms of our readiness to deal with the demand for change? Are we ignoring it, or are we going all the way and collaborating with fintechs to make it happen? There goes the optimism. Any response to that? Nigel?
I'm just still reading it, sorry.
Or George?
Yeah, a little surprised. I mean, I think that Edward said it earlier, I think that the collaboration is the word that's on everyone's minds at the moment. And from my perspective, every other hour of my day in the last probably year and a half has been about meeting a fintech, sitting down with somebody, listening to their value proposition, understanding the new technology, trying to see how it fits. And the only thing the only takeaway I have from it is I can't do it without collaboration. I can't do it without collaboration inside of the correspondent community, but I can't do it without collaboration with fintech. And some of those fintech you'll buy in, some of them you'll buy in their service. Some of them you'll collaborate with. I think there's different models. Each one is slightly different based on the value proposition to your end-to-end experience.
I don't know this statistic, but I've heard that 95% of fintech companies ultimately end up failing.
That's true for all startups, right? Yeah. So you're going to have 80–90% of startups fail, right?
It doesn't mean we shouldn't partner with some of those startups, especially those that are the most promising, but you have to make a judgment call. Which is the next Apple, which is the next Google. I'm not sure we know that answer. Of course, you have to be, forward-looking. Of course, you have to be cognizant of what is out there in order to innovate yourself. But at the same time, you also have to be prepared that, to keep your eye on the ball on what's happening day to day as you're preparing for the bank of the future. Banking is fundamentally the business of banking hasn't changed as dramatically as other businesses. Is that a good thing or a bad thing? I happen to think it's good in the sense that it continues to develop a trust in the system and the safety of the system. And it's not a good thing if banking doesn't innovate and respond to the needs of their clients, to their consumers, to the corporations they're servicing. So we have to do both. We just have to find the right partners to do that.
The right middle.
Again, maybe a slightly provocative view, but I think banks are actually becoming quite impatient. And the evidence is that they're starting to form consortia amongst themselves to explore primarily open source applications and standards, because I don't think most of the fintech community has really come to the table and shown them something transformative, something that they can use as an industrial strength application. And banks are going, I kind of get what you're talking about, I like your pictures, but you know what? I don't really think you've got it. And so I think more and more, and there's a lot of public evidence about around at the moment around banks pulling together, working with prominent technology companies, some small, some large, and really trying to solve the problem themselves and saying, right, let us get on with it. Yeah. I'm just getting impatient here. There's something there. We're trying to find the use cases. We're trying to find the problem to the solutions that are being pitched to us on a weekly basis. But I think they're taking much more control of this now.
Good, excellent. Mindful of time, I thought we might want to give the audience the opportunity to ask some questions, if that's okay with you.
Sure.
So, any questions to our panel? This is a wait-and-see approach. So building on Nigel's point, Jawar made a reference in his opening speech about some momentum building up, and that I think was creating some of the optimism here around the group. Any thoughts on a reflection on that? Are you sensing momentum, Ebru?
Yes, I would say that I'm definitely sensing some momentum, and I agree with all the comments that Nigel made. Here at the conference, and this is only day 2 morning, but already I've been party to various conversations which is around this topic. Maybe not necessarily always directly the topic itself, but there is a lot of discussion around what can we do, what should we do in various different forums where under SWIFT's umbrella where we are coming together to think about things. And there is already existing consortiums out there of banks, not necessarily always themselves, but also with others trying to collaborate in this space. The other thing I would say in terms of, and it is probably true if you think about the entire community of banks, there might be some who are more active versus some who are more wait-and-see approach, but in some ways that's actually natural. In the usual correspondent banking community, we don't all play the same roles. Some institutions are playing global roles, some are playing regional roles, some are playing entirely local roles, and our customer segments also define us. So I think there is definitely some who are much more active. And activity, I don't think, is necessarily only in terms of trying to figure out the next set of innovation or trying to figure out who to partner with. If you look at it, there's a lot more banks over the last 4 years who's built R&D type centers, innovation labs, where they are doing various different things. Created venture arms who are investing into some of these new technologies or fintech companies. Even hiring patterns. Again, I mean, I cannot talk on behalf of every institution, but in terms of what I'm seeing internally in my institution, there is even talent type discussions which is related to innovation and how to think about this space and what can we learn from startups. How do we act more agile? Chris made a good point about startups. We perhaps only see certain aspect of it, but one of the things that they are very good at is focus. They don't try to run 3, 4 different type of businesses or products. They are very focused on doing something. So how do you embed that type of culture So I think there is a lot going on, at least in certain institutions, and over time, this is what happens in this community that actually comes and starts infusing to the rest of the community. I think for me the question is, can we move faster? Can we add a little bit more speed to this, which all of us and of course our customers can benefit from?
George?
Yeah, one thought I had, and maybe it's slightly at the edge of this, is that at the end, ultimately, when we started building SWIFT and the community, it was really about cross-border, and much of what is occurring is in the domestic space today. The challenge we have, of course, is that we need to respond to it in the international space, and there are use cases for that. But the other challenge is that no one, I think, would argue against the challenges that we are seeing in the rise in nationalism and nationalistic regulation that is fragmenting the global ecosystem more than pulling it together.
Yeah.
Ironically, correspondent banking was built to address that challenge many, many years ago. That somehow you had to find a way to get a consumer transaction completed, to get a trade transaction done, to get a ship out of port, despite the fact that there were city-states, national states, and all sorts of regulators. It's kind of a return to the past, unfortunately, from a regulatory perspective, and it's not going to get any better in the near term. And so in that lack of regulatory harmony, we have to collaborate with fintech and banks to find the way
around that complexity.
Around that complexity. You know, some people are talking about worlds of disorder and order.
Yeah, exactly.
If we're moving into worlds of disorder and order, it's going to be dependent upon us to get transactions so that urgent money can be delivered, so that money can be delivered to the malaria projects in Africa, and so that we can get a boat out of port.
Cool. There, somebody came up with a question. Great. You can mention your name, institution, and then the question once you have your...
My name is Sagir Mufti. I represent a bank from Abu Dhabi called Adib, and I'm going to make two statements, and I would like to respond from the panel on the statements. First statement is, in the first question you asked, everybody answered transaction banking will go up. Question is, for whom? For banks, or for banks and non-banks? Second statement, a lot of the thinking in banks, I think, is based on today's railroads, today's systems that they have and the limitations of those systems. And while everybody is very optimistic about change, look at the pattern of spend. Everybody knows that technology spend in banks is based on maintenance more, new change less. We're not seeing numbers changing. So how do you see change coming when you're not investing as a bank, or as all of us are investing in new technologies faster than maintaining the old technologies?
Good. Who wants to go?
Is that a question? Yeah.
Michael?
Look, I think that we've been through a period of consolidation post the financial crisis, and I think a lot of our investment energy was spent around compliance and resilience and security. And I think it's probably more coincidental, but the fact that there's this wave of disruption emerging is because we've kind of taken our eye off of the revenue pools that sat out there and the friction that we had basically made money out of in the past. And now we are sort of releasing ourselves from, partly, the shackles of that compliance-driven investment and releasing our investment slates much more in favour of innovation and investment in new technology and client propositions than we were in securing our systems and generating the right information for regulators. So I think it's a point in time. I don't disagree with you in terms of where we've been, but I think we've come out of that and the sort of come out of the haze, and so I can speak for my organisation that our orientation is very much around transformation, around innovation, and increasingly projects are prioritised and approved on that basis, given that a lot of that compliance work is being completed. And then there's the whole thing, George mentioned transformation. I think there's a difference between transformation and innovation. Transformation for me is about renovating, upgrading, getting highly available systems, making them 24/7, using standards to gain domestic and international interoperability. That's renovation and transformation. I think innovation is often, it's made too much of it. It's too big a topic, where innovation is really something brand new, in my view. And we can invest in those brand new business models as well.
Good. we have 30 seconds to go. I want to close with Chris telling us why we're not going to end up like Kodak in its industry as a banking sector.
So it's interesting as we
had 20 seconds.
Yeah, 20 seconds. We had a discussion yesterday about how things have changed in the last 5 years, where this same discussion 5 years ago was ridiculed. A year or two ago, it was violently opposed, and now it's being accepted as conventional wisdom, right? And so I think that's good. That's the progress of truth. And so the truth is we have to do this. We're all agreed about it. Now the question is, where will we start and how fast will we do it?
Good. So I hope this panel discussion has helped you forward on the progress towards truth and understanding of what we need to do and make it happen. I want to thank our panel and wish you a good continuation of Sibos. Thank you.